Welcome to chartingwealth.com for Wednesday, April the 8th, 2015. Now, we don't say I told you so on this program, this recap of what's happening, but we do like it when we have a good feel for what occurred. Now, if you recall yesterday when we ended the broadcast, we were looking at the IYY being penetrated, and we said if we had a gun held to our head, which way did we think the market was going to go? And of course, it looked like up. Now, that is with some precaution. We continue to have the two-day chart moving down. The MACD is continuing to not cross. It is getting closer. The derivative oscillator is backing off some. We're seeing penetration, of course, this is our two-day trend line. It has been broken at this point. Now, if we go back, and that's the two-day chart, to the 4-hour chart, and we look at what happened back on the 6th, we can see that it did cross going up. It's continued, it's pushed through. Now, this is of a bit concern right here because we have not quite a doji, but still lots of indecision with that cross because you can tell that the bulls pushed it up as much as they could. The bears pushed it down. The bears pulled it down as much as they could, not quite as low as the high was high, and then the bulls were able to pull it up, and we've got a narrow trading range here at the end of the day. However, we do have a cross. It looks like it narrowed a little. Look at that. It is a hard time getting over this 50-period moving average. Again, we just put into our charts different period moving averages just to give us a feel for, and again, the 4-hour 50 period, that's 25 days. So it's just not wanting to push past that. You can see the derivative oscillator has lost its steam. What is the market doing right here? Well, again, we don't have a confirmation of a big push up on the two-day chart, but we have had a crossover here. We have had a cross through the two-day trend line. So we do have some up movement in the total market. Now let's break it down a little further. Let's go back to the two-day chart and let's go over to the S&P 500. Again, remember, SPY is an ETF, an exchange-traded fund that tracks what? The S&P 500. So, and that is 500 big stocks in the market. And let's take a look at what's going on. Well, we can see that again, it is violated just like on the IYY, the total market. We can see that the trend line's been violated here going up. We don't have a cross yet confirming that on the two-day chart. We do have the derivative oscillator moving back. We do see a nice green candle in an up move. That's good. Now let's break it down a little more and go back to the 4-hour chart. And what does this show? Again, it shows some leveling off. It has pushed through at least on the MACD, the green band. It has moved over the 50-period moving average. We do see continued up movement on the derivative oscillator. Of course, it crossed back on the 6th, and we see the continued push up. Again, leveling off a little bit here. Will it go higher? Perhaps. No guarantee. You know, we don't have a long-term trend that's going up. The long-term trend is still not crossed over on the MACD, but some nice good movement. If you had gotten in back here, you would have done well so far as the S&P goes. Now, let's go back to the two-day chart. And let's revert over this time to my favorite chart, which is the Qs, QQQ. That is, of course, what? It is the NASDAQ 100 technology stocks. And we can see, look, the NASDAQ has not crossed over going up on the two-day chart as far as the trend line goes. We do see that the derivative oscillators backing off. MACD has not. And again, we love the MACD. It's just a great, if you look here, you can see when the moving average convergence divergence crosses over, typically the stock price continues to follow. Not crossed over yet. We do see potentially the makings of it. Now, if we revert back to the 4-hour chart here, we can see where we had a crossover. back again on the 6 like everything else. It's crossed over together, moving up, and it is trying to penetrate, but it has not penetrated the 2-day trend line. So we do see some up movement, not all that strong, particularly with the end of today, the last part of the trading in the afternoon. We'll continue to watch. Remember, the overall market is in a downtrend. That is the 2-day big chart. You might be able to make some money on the little chart, but the little chart could be petering off. We just have to continue to pay attention to where things are going. Now, lastly, let's go back out to our 2-day chart. And let's look at gold once again, and look at gold. It has continued to move up for many days now. 1, 2, 3, 4, 5, 6, 7. 7 2-day charts, 14 days. Again, it is not violated. It's not rolled back over. We can see the derivative oscillator continues to accelerate, MACD. Now let's look at a shorter time horizon, and we do see that it has, remember yesterday it was pushing out of the Bollinger Bands. Those are the volatility bands. It has moved back in. The MACD has continued to bump up. It's not moved over, but it is way up at the top. We do see the derivative oscillator is moving off, so we'll have to pay attention to just what's going on there. Is that a short-term correction to get inside the Bollinger Band to keep speed moving up? Well, we have no crossing going down on the 2-day trend line. We have no crossing on the MACD. We do have the derivative oscillator moving off, so we still have an uptrend on gold. Could be running to an end. I mean, it's a nice 14-day uptrend, and that is really sweet for those of you who got in back here when the MACD and the derivative oscillator moved over and jumped in there. You have had a nice ride on up. So all the best to you there. Those of you who got in here when it crossed back over or right around in here, you've not done too badly. If you would have gotten in somewhere around $15 and have gone up to the high of 17, not too bad either. Continue to watch gold. It could be petering off here. At least it looks like it's starting to on the half-day chart, but the 2-day chart's continuing to show up moves. So that is the sum and substance as it ended on Tuesday. Be ready for Wednesday. Good luck in trading. Great trading. Hope the market treats you well. Remember, follow the charts.